To bring in Ozan Oscaral, the founding managing partner from Tanto Capital Partners. Let's just start with Argentina. I know your focus is a lot more broad, but it is interesting because this news came out in the last 24 hours. Argentina has been a mess economically and politically, if I can use that word, over the last few years. Milei wants to set it back on track again. My question is whether the treatment, the cure, will actually end up killing the patient.
Well, I mean, this has happened before. I think the benefit here is that he did not win through the first round, so he has won through the second round with Macri's help, which means that he has to govern through somewhat of a consensus at the first part.
Yeah.
The ironic thing is the very reforms and changes that the Argentinian people really want to take place will hurt them first. So you're absolutely right that we have they have a very tight frame to be able to instigate change, bring FDI, and have real consequential change. I do think that the biggest obstacle that they have will be that because of the changing constitution in 1949, Argentina has been just involved in one political battle after another. So if they can manage to get enough majority in the Congress, for which he needs Macri's help for the moment, and get through a meaningful amendment to the constitution, then investors potentially could think of investing in Argentina in the long term.
Yeah. It's interesting when we were talking about the results of this second round. One thing that I was saying is Macri is likely to be a restraining force on Milei's more radical tendencies. But I just wonder from an international investor perspective, is Argentina one of the spots that investors are looking at as a potential investment opportunity in 2024, or are there more obvious opportunities out there?
Look, I mean, we've had this in 2016 when Macri was elected as president for the first time. My sense is that investors, in terms of high-quality FDI coming in, I'm not talking about capital markets issuances, will only contemplate investing in Argentina in the long term when they see Argentinian money and investors putting money into the country first. And I don't think they will get there until or unless they actually have a meaningful amendment to the Constitution, which obviously needs a supermajority in the Congress. 2024, Jumana, is going to be a year of elections and a year of multiple different shifts in global geopolitics, but also repricing of risk across the world. So vis-a-vis EM, I do think that there are other countries that may take precedence in terms of investors' target list.
Okay, so give us, what your highlights are and where you think those opportunities are going to be, and also to what extent, generally, when people think about EM and emerging market opportunities, they also think about the trajectory of the US dollar, the interest rate cuts that are beginning to be penciled into the US rates curve. All of that, in theory, should be a tailwind for EM markets, but is that already being priced in? Is that already factored into where we go next year?
I don't think it's necessarily being factored in because we are trying to have a shift from a system or a macro and fiscal policy structure that was frankly based on hope for the past 14 years into what is a much more sane equilibrium where interest rates exist, and for companies that operate under these frameworks, profits matter. And the reason why I said it is, if in 2024 the market digests the equilibrium of what is happening in the US and let's just say the Western world, pricing EM will become easier. At the same time, the tailwinds should exist, but it will be selective. Not all EM countries are the same. No, obviously, you have those that have a current account surplus that will be looking to deploy that surplus meaningfully, all under the geopolitical pretext of the great power rivalry that is US versus China around semiconductor manufacturing, the concepts of nearshoring, friendshoring, energy transition, which is going to be absolutely critical. I mean, we witnessed what happened in COP28.
Yes, so let me pick your brains on that. COP28, I thought, was so interesting for so many different reasons. Of course, we've been all focused on the fossil fuel language and the fact that it finally was included in the statement, not the word phasing down, but a transition away from fossil fuels. But let's not forget that this was a summit that brought together senior Western policymakers with the global South as well. So this agreement had to be signed off on by almost every single stakeholder around the world, including developing nations, including some of the poorest nations that are most affected by climate change. What impact do you think this COP28 will have on the emerging markets complex?
Sure. Look, I think on the whole, that announcement was a success. Now, normally I would have said that semantics kind of matter, but they don't until it gets implemented. But as Sultan Al Jaber said in his closing statement, it is how we act and not what we say that counts.
Yeah.
In this case, to be able to get any sort of consensus across 200 countries on any subject matter is a win nonetheless.
Agreed.
So what does it mean for EM? It means different things for different countries. I think one of the countries that will feel the pressure to reform vis-a-vis this area will be Turkey, because as the size and scale of emission trading schemes in the world, aka the compliance markets, of which European Union is the largest for the moment, and as they are starting to implement something called CBAM, the Carbon Border Adjustment Mechanism, as of January 1st, 2024, countries that export heavily to the European Union will get impacted.
Right.
And Turkey is one of them. So for example, Turkey and Turkish companies will have to invest in trying to bridge the gap between where they are right now and where they have to get to within the next 3 years.
So interesting. So bad timing as far as the economy is concerned, because it seems like they are slowly trying to turn the ship around. The interest rates have obviously moved a lot higher over the course of the summer. We're beginning to see some stabilization in inflation, some positive green shoots emerging. But of course, medium term, long term, a lot of those challenges still remain.
The biggest challenge that Turkey, I should say, faces is one of predictability and stability. Now, we have a local election cycle that is coming in March in 2024. Although this is local, it is quite an important one. I suspect that should the country be able to travel through that without much volatility, then Minister Şimşek and Central Bank Governor Gaye Erkan will have more ammunition to continue this predictable orthodox monetary policy. If this can be supplemented by reforms around the judicial structure and the constitution in Turkey, this may present investors a more predictable landscape to invest in.
Yeah, let me ask you a geopolitical question though, because economically we speak about them sort of trying to right the trajectory of the economy, but geopolitically, President Erdogan has been, rubbing a lot of his allies the wrong way, whether it's over Swedish accession talks to NATO, whether it's him cozying up to Russia from time to time, even his stance over Israel-Gaza. Where does that put Turkey in a relative, a situation vis-a-vis their Western allies? Because economically they seem to be doing the right thing, but geopolitically Erdogan is going on his own way.
That's a great question. It's a loaded question, but a fair question. I would put Turkey's geopolitical importance again in the context ultimately of US versus China, number one. It will become a more important country. It does offer a very credible semi-hedge against over-interdependence in Chinese manufacturing. So the importance of the country will increase alongside countries like India. However, President Erdogan is trying to walk a very tight rope, which is not easy to do. And I do like to think, and I do like to believe, that a lot of the rhetoric that is rubbing the Western allies the wrong way is geared towards winning local elections, as most politicians tend to do. So I am looking for the main litmus test of the foreign policy of Turkey shifting a little bit perhaps, or the tone shifting a little bit perhaps, after the local elections are done, because then we have a period of 3.5 to 4 years where there should not be any elections.
Yeah, so interesting. Ozan, it's always a pleasure to have you on our show.
Pleasure,
Thank you for coming in. Ozan Özgüral, the founding managing partner from Tanto Capital Partners.